Ladies and gentlemen, apes and apettes, welcome back to the channel. It is time to talk about what is currently going on with AMC stock as well as the broad markets. You've seen a lot of big up and down moves. Apple hitting its key resistance level and getting beaten down as soon as they did so. All of this is very important for AMC stock as AMC stock looks poised for a continued rally to the upside. And what I'm starting to see right now on the charts is we're more than likely going to get a big move coming either before or after earnings. You look pretty coiled right now on the technicals, and we'll also go over that here in this video. Now, I want to jump straight into it. First things first, with a big earnings here in after hours for the markets, and this will affect AMC, it will affect the broad markets, it will affect everyone. It is NXP. Now, this is a semiconductor company that does a lot of the contracting for Apple. And everyone wants to know how Apple is doing. People think it's a consumer staple, much the same way as food and water. But Apple is not a consumer staple. If Apple is feeling the pain, then it could be a leading indicator that maybe the rest of the economy is going to feel some pain. And that's why it's important to watch NXP, and that's why tomorrow could give you a pretty big move heading into the other earnings that we are going to see as well. Now, let's get into what happened today as well here in the markets, because, I mean, today you did have some data that came out that was not so good for stocks, and specifically not so good for this narrative of 200 basis points or 2% rate cuts coming by the end of 2023. You got the ISM manufacturing PMI. Now let me just preference with this. Anything under 50 is contractionary, right? That's just an overall contractionary number. Last month's reading came in at 46.3. You were expecting 46.5. It came in at 47.1. So this is a good sign for the economy, right? But this is a really bad sign for inflation. Right here, ISM manufacturing prices paid. Last month, this came in at 49.2. You were expecting 50, and it came in at 53.2. Much higher than expectations. ISM manufacturing new orders as well. You were expecting 44. Last month's reading was 44.3. It came in at 45.7. So across the board, hot economic data. And it's not hot in the grand scope of like these numbers are good. They were just a lot higher than market expectations, because keep in mind, investors are expecting 2 percentage points worth of rate cuts by the end of 2023. That's why the markets have been rallying. There's only 2 reasons why stocks go higher. And when you're talking about the S&P 500 or the NASDAQ or the Dow as an index here, it's because either earnings are going higher and getting better, which we know is not happening, right? That's not happening in 2023. Maybe 2024, 2025, but it's not going to happen in 2023. Earnings are going to be down year over year. 2022 earnings are going to be better than 2023 earnings, unless a miracle happened. So it's not that. The other is multiple expansion. Multiple expansion just means the number that you're willing to pay for a stock. And let's make this very simple. Let's say Tesla is a $100 stock. Well, if they report to us $1.25 of EPS every quarter in 2023, that would be $5 of EPS for 2023. I'm just making up numbers here. Well, if you divide 100 by 5, you're at a 20 times PE. Well, do this for the S&P 500, and you're expecting around 230, 220 of EPS for some people are as high as 250, 245 for EPS in 2023. Well, you're going to come to a multiple of about 18.5 to closer to around 19. Whereas before this rally, you were sitting at about 16. So it was a little bit more reasonable. This latest rally has pushed us into a very much bubblicious kind of market with stocks such as Meta, Microsoft, Amazon, Google, Apple, Nvidia, and many others. So this market is very top heavy. That's why Apple earnings are going to be very important. That's why any and all economic data that points to the Fed continuing to raise rates will be important, because if the Fed stays higher for longer and you don't get 2% of rate cuts in 2023, well, multiple expansion will turn to multiple contraction, and that will lead to downside in the markets. Now, downside in this trade with AMC stock is a positive thing. Downside for the broad markets, because that pushes the collateral requirements higher for hedge funds, and that means you probably get shorts covering a lot faster than they otherwise would have. So that's important, and that's why I will be very closely monitoring each and every single data point that does come out this year, really this week, as well as the Fed meeting that is going to be happening on Wednesday and Apple earnings on Thursday. Now, AMC earnings are going to be Friday pre-market. I find it interesting they're doing earnings Friday pre-market, because they usually don't report earnings on a Friday. They're usually on a Wednesday or a Thursday. But they're on Friday this time around. And I think it's interesting because you're going to get all of your major, news and data pretty much out of the way by the time AMC does report earnings. So there's going to be a lot of things going on here. And if you look at the charts, I mean, this is a classic bullish uptrend. There's no other way to put it. You're well past now the 50 and the 100-day moving averages. You're literally coiled at this price. This is a coiling formation. And it looks like you're about to get a big move higher. Now, that big move higher is, at least in my opinion, going to send you to $5.75 per share, likely before earnings. After earnings, well, people want to see what the balance sheet looks like. People want to see how much debt AMC paid off. People want to see how AMC is looking at the demand picture for the rest of 2023. And if Adam Aron's Twitter is any indication of that, they're pretty excited about the upcoming slate of movies that will be hitting theaters as well. Now, we will elaborate on this more in the next video coming out roughly at about 2 p.m. Go over all of the earnings expectations, what markets care about, what they don't, what's going to drive AMC, and ultimately where I think AMC stock is going to go. But a quick preview here, I think it's going to be bullish. Now, we also have this court date, and that is really the one thing where you just don't know ultimately what's going to happen. You know that if this reverse split gets delayed even more, or if there's a revote, or if there's something else that happens that delays this, that's going to be a positive for AMC share price. But you just don't know when that's going to happen. It could come out right now. It could come out tomorrow. It could come out on earnings. It could come out in a month and a half from now, right before the court date that's likely around June 29th or June 30th. You just don't know. So every single day, you got to be on watch for a big up or downside move with AMC stock. But from right now, heading into earnings, I think it likely continues to be bullish. And the fact that we are down today about 0.5%, 0.60%, and not down more is a positive thing. You cannot just have green candles back to back to back to back without a red candle. What I really wanted to see is, one, how many green candles in a row did we get? Well, we got 1, 2, 3, 4 green candles in a row. You have rallied about 14% in the past week. Very respectable rally. But I wanted to see how big a red candle is going to be, because that's where the sentiment can flip, and that's where you can see just how strong a rally is. It's not in the up days, it's the down days. Do you hold the up day moves? Do you hold the up day gains on your red days? And it looks like we're doing that. AMC marginally red today, down 4 pennies, down 0.64%. This would indicate to me, at the very minimum, AMC stock's probably going a lot higher from here. Now, if AMC completely deteriorates by the end of the day and we're down like 5 or 10%, obviously that's probably not going to happen. But if that did happen, maybe this video is going to sound a little bit different coming at 4 p.m. today. Don't expect that to happen, though. So that's a quick rundown of kind of where the technicals look and what's currently going on. Now, the RSI is also at 57.05. Again, after 4 consecutive green days, it's a positive thing to see these technical indicators are not overbought yet. Not even close. You're almost at neutral. Neutral is 50. You're at 56, 57. Overbought is 70. AMC tends to get to the overbought side, and then you tend to fall back down from there. So you're not even close to that. Does support a couple more days at least of strong rallies in AMC before you even get close to that 70 number on the RSI. The MACD also in firmly bullish territory above this neutral line at 0. Not by much, by about 5 basis points, currently at 0.059. If that don't make sense, basically the MACD just tracks volume, it tracks relative strength, it tracks a lot of different factors that come together in one chart. And MACD can also be one of the most reliable indicators that you can look forward to kind of get a gauge of the trend, the overall sentiment, the overall volume, buying and selling of a stock. And AMC's MACD looks positive. Also, the yellow line is above the blue line. So more mid-term, AMC also looks bullish. You could get a lot more bullish, but we'll take any bullishness that we can get for now. So there you have that. Volume currently on the day, I should say, sitting at about 8.5 million. So it's also a very low volume day compared to kind of the green days that we've seen recently, where you're getting about 20 to 30 million shares trading hands. We'll see what the volume looks like by the end of the day, but you're not seeing a whole bunch of selling here. And I think this added uncertainty with this court date will continue to fuel this upside move because shorts have to hedge out those short positions. And that's key. I think you're going to continue to see bullishness because of that factor alone. Shorts are losing their asses over here, and that's a fact. We can definitively prove that. Now, as far as the option activity for this Friday, 20,000 calls in the money, out the money calls at 104,000, in the money puts at 24,000, out the money puts at 100,000. So these numbers are almost 1-to-1 here. There's not a big skew towards the calls or towards the puts. Does suggest to me nobody really knows what's going to happen. And typically when you are going to get a bearish week, you tend to see a lot of option activity. Obviously on the put side, you tend to see a lot of puts out the money, a lot of puts in the money, lots of calls out the money, and very little calls in the money. Not really what you're seeing this week, so it does look a little bit different. Now let's go ahead and refresh this page and take a look at AMC's Ortex data. And off of the numbers that I was just looking at, the cost to borrow rates do look higher today compared to what we've seen on Friday. Go ahead and click on the live short interest of free float. Interactive Brokers has about 700,000 shares currently available with the cost to borrow rate of about 211%. Estimated short interest of free float at 25.74%. 133 million shares currently sold short. Cost to borrow average 350%. Cost to borrow max 356%. Cost to borrow minimum 335%. I think that cost to borrow average is pretty respectable, 350%. I don't think that is chump change by any means. If you look at any other stock, you're not seeing numbers like this. I can't find a single stock with cost to borrow rates that are this high. Short interest, yeah, you can find some stocks with a short interest similar to AMC, but not those cost to borrow rates. In theory, it should be getting cheaper to borrow AMC stock after the new news that we got that came from the courts, but that was quite the opposite. Now, the number that I really want to watch the most is this, the dollar amount currently sold short in AMC stock. Last Friday, it was 727 million. We reported on this, I think, twice over the weekend. Now it's at almost 742 million. So it is up like 20 million almost. What was that? 16 million in just today alone. So I think that is pretty sizable and what you want to pay attention to because it's not always the short interest that gives you short squeezes. A lot of the time, it is also the dollar amount currently sold short in AMC stock. The higher, the more likely you are to get a squeeze. Same thing with the days to cover. Higher those are, more likely you are to squeeze. 7 days ago, days to cover was at 4.99. Today, it is at 5.08, and it looks like it's going to trend higher as the volume has been pretty low with AMC. You also are sitting at 100% share utilization. So there you have that earnings picture. Like I said, today and after hours, you have Arista, better known, I mean, the ticker, you guys might have traded it before. It's ANET. They do have a chance to move pretty big, and I do have a position on ANET. Max loss $250, max gain $5,000 for a 19% drop. So we'll see how that goes. I like the risk to reward there. If you guys want my breakdown, you guys want to see the trades that I make in real time, link down below in the description of this video. But that is the only trade that I do have for today's earnings. You do have MGM Resorts, Transocean, Diamondback Energy, Avis Budget Group, NXP, MicroStrategy, Vertex, CF Industries, and Chegg. NXP is going to be the big one here in after hours, and it's really going to drive Apple as well heading into their earnings. It's going to be a pretty good gauge on how Apple might report their earnings, because like I said, NXP is a big contractor for Apple, and I think they do a lot of their screens, if I'm correct there. Might be wrong on exactly what they supply, but I believe it is the screen. So there you have all of that information. We'll give you guys a deeper breakdown of all of this information coming at 4 p.m. today, as well as an in-depth look at the earnings situation and how AMC stock might react to earnings coming on the video at 2 p.m. today as well. Thank you guys for watching, and I will see you in the next one. Tell them thank you for watching.
Thank you for watching, Dad.